Thanks, Lata, for putting that in perspective. Let's move on and invite the first corporate on our show. Minda Industries reported a strong set of Q3 earnings last week, a revenue growth of 36%, margin expansion of 230 basis points, which drove a 140% increase in the company's profits on a year-on-year basis. Sunil Bohra, the ED and Group CFO of Minda Industries, is now with us. Mr. Bohra, morning, and thanks so much for joining in. Strong revenue growth in the investor presentation. You've spoken about strong, fresh order wins in switching, lighting, sensor business. What is the growth that you're looking at for Q4? Can you maintain this kind of run rate in this quarter as well as next year?
Well, definitely, as you rightly mentioned, the momentum which has been built in the industry since July has continued. Obviously, October has been the peak in the fall. We have festive season in November and December. Now things are getting a bit streamlined. While we are, as of now, not near the peak we have seen in October, but if we have to see from year-to-year basis, because the industry we operate in, normally there are seasonalities. So on a preceding quarter, while there may be some delta, but if we have to see from the last year Q4 versus this year Q4, definitely things are looking much better than what they were then. And we are pretty confident in terms of the momentum which we have built in terms of addition of our new products, addition of customers, that is starting to reap fruits for the organization. We have seen the kind of numbers we have done in Q3. As you just mentioned, the top line growth, we have seen almost 36%. This, if you compare with the industry volumes, which have been higher by 17%, it's clear outperformance of more than 20%. So things have definitely been looking good, and it has been supported by the new products which has recently been commissioned. It also has added some momentum, and that will continue to deliver additional volumes in the coming quarters. The plant is in the ramp-up phase. Same is for the sensor. So there are a lot of things which has been happening, and we are pretty confident that Q4 should also be positive when we compare with the last Q4.
What about margins? What is the outlook on margins? Can you sustain margins at these levels?
No, definitely sustaining these margins is a big challenge, because if you know that in past we have been able to sort of move up our margin profile to 12.5%, and currently we are at 14.7% for both Q2 and Q3. And as the economy is opening up, there are going to be little more overheads, expenses, etc. So while we are aspiring to continue to sort of maintain these margins, but I am pretty confident that it will plus minus 0.5% or so more than what.
And what have been the total quantum of order wins this quarter?
So normally what we see is that in terms of order wins, we don't see the total order book value, because you don't know the life of the model. It can be 4 years, it can be 5 years, it can be 6 years. So normally what we see is their incremental annualized peak value of businesses which we have won. In recent past, we have got, in last few months, we have got good business wins from lighting and also some of our blow molding businesses. And that is what is also now sort of making us new plans for capital expansion. We will be putting up another project in Bangalore for our blow molding business. We are currently working on to see how we can expand our capacities in the lighting business, because that business has seen real good business wins. So to supply those businesses, because whatever business you win, normally the supply cycle is 1.5 to 2 year hence. So we will need to invest in maybe a greenfield plant as well. The things are on the slate, on the board as of now. But things are looking good, that we are currently now going into expansion, capacity expansion mode as well, which means that some of the businesses are almost close to their capacities, which was not the case maybe a couple of quarters back. So definitely in terms of new order wins, lighting, switches and blow molding.
The capex number that you're looking at?
So this year, roughly so far, we have done something like 50 odd crores, and on a full year basis, it may be around 300, 325. Going forward, we are focusing a very strong, tight control on our capex. So going forward, we expect the capex to be in the range of around 400 crores or so. But we will be able to give you a better clarity once we come up with our numbers in the next quarter, because currently we are in the preparation of our budgeting exercise. We also do our long-term exercise thereafter. So we will
Mr. Bohra, we've got you in a bit of a scratchy line, so we'll leave it at that for today. Thanks so much for joining in. So that's Minda Industries guiding for Q4 growth to be better on a year-on-year basis, though sustaining margins at Q3 levels of 14.5% may be a tad bit difficult. They're also looking at some capex. The stock is surging up 8%. We'll slip into a break on that note. On the other side, we'll get chatting about the market fundamentals. Rajesh Bhatia, the MD and CIO of Investment Trust of India Long Short Equity Fund, joins in next.